So today's presentation to investors had three key messages to it. Number one, markets are going through a volatile period post a number of years of quite strong returns. Number two, our approach to managing through these volatile periods by offering diversified investment portfolios is key to navigating these waters. And number three is we exist solely to deliver the investment objectives of our investors, not being benchmarked to an index, but rather to meet their financial objectives. The core elements of our investment philosophy are to preserve capital in times of negative markets, a focus first on risk as opposed to return, and to deliver a more consistent return outcome over time. Managing through volatile times like this, it's really key to have a diversified investment approach so that your risks are not concentrated in any one sector or asset class, as is the focus or the ability to have a focus on the longer term investment horizon as opposed to shorter term. Shorter term markets can be very inefficient and there can be quite a bit of dislocation away from fundamental prices. Our longer term approach and diversified approach means that we're able to focus and anchor our investment decisions on core fundamentals as opposed to short-term volatility. Further to this, we actively manage investments across both asset classes and on individual assets within asset classes. So although we would never openly invite volatility into the portfolio, at times this can be a critical element of us being able to deliver additional value to our investors. And that said, look, if there was a circumstance where we didn't think anything was attractive, we're more than happy to sit on cash for a period of time, particularly given these volatile periods, because we think that opportunities always present themselves, and if we're patient with our capital, we'll be in the best position to deliver great returns to our investors. This flexibility in our investment mandate and our active approach to managing asset classes are tools aimed to allow us to get our clients from point A to point B. So we're not managing to any benchmark, any spurious benchmark. All we are existing for is to identify and then meet our clients' investment objectives. Over a 10-year time horizon, the portfolio has delivered a 9% compound return per annum, which is in excess of 4% over that delivered by the equity market in the same period. And we're achieving that with about a third of the risk of being solely invested in equities.